Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Indian equities end flat on the last trading day of 2024 after yet another choppy session. For the full year, the Sensex and the Nifty end 9% higher, but the mid-cap index gains more than 24%. The small-cap index is up over 29%. Healthcare and pharma are the best performers of the year. The rupee remains weak as importers buy dollars to meet month-end and year-end obligations. The domestic currency ends 2024 over 3% weaker. Economists polled by CNBC-TV18 see the rupee sliding to 87 by the end of 2025. Most respondents don't see bond yields going below 6.5% in the coming year. EaseMyTrip planners shares fall after co-promoter Nishant Pitti announces plans to deboard the company by selling his remaining 14% stake via block deals. However, only 1% equity changed hands in today's session. Pitti had sold 14% stake back in September as well for 920 crores. Ather Energy's IPO gets a green signal from SEBI, the second EV player to drive into Dalal Street after Ola Electric. Ather is looking at raising close to 4,000 crores. This would be a mix of a fresh issue and an offer for sale. 2024 has been a blockbuster year for IPOs with a mop-up of close to 1,60,000 crore rupees. A landmark year for cryptocurrencies as the Trump victory gives it wings. Bitcoin blazes ahead, shatters the $1 lakh threshold, surges close to 140%. Meme coins and altcoins steal the show. Cryptocurrencies' total market cap now at $1 trillion on the last day of the year. The U.S. Treasury Department accuses a China-backed hacking operation of tapping into workstations to steal unclassified documents earlier this month, calls it a major incident. China denies the allegation, slams what it calls the spread of false information for political purposes. The United Nations accuses Israel of systematically blocking aid to Gaza. The World Health Organization says hospitals have become battlegrounds as 2024 draws to a close. The death toll in Gaza stands at more than 45,500 people. Poor air quality in Mumbai prompts civic body to impose a ban on construction along with other measures. No construction activity will be allowed in areas where the air quality index is more than 200. All of that and more coming up in just a bit. But first, the market action of the day. It was a flat close to 2024 after another choppy session. IT stocks were the biggest drags in trade today, while healthcare and PSU stocks offered some support. So that's the Nifty closing 2024 absolutely flat. The Sensex down 100 points, 633 lower on the Nifty IT. The PSU Bank Index was up by almost 1% today. But overall, a positive end to 2024 with the Nifty extending its gains. For the year, the Nifty is actually up by about almost 9%. The Sensex and the Nifty both have ended with gains of 9%, each delivering single-digit returns for the second time in 3 years. That is the Sensex up by about 8%. The Nifty Bank underperformance continues. The index has underperformed the benchmark Nifty 50 for the second year in a row. Sample this. In the last year, the Nifty saw returns of nearly 9%, while the Nifty Bank rose just 5.5%. So that's the Nifty Bank up by about 5%. In 2023, Nifty saw 20%, but the Nifty Bank only gained 12%. Now, let's talk about some of the other aspects of the market, but onto the money markets now, where the rupee remained weak as importers bought dollars to meet month-end and year-end obligations. The domestic currency ended 2024 over 3% weaker. Economists polled by CNBC-TV18 see the rupee sliding to 87 by the end of 2025, but most respondents don't see bond yields going below 6.5% in the coming year. Lata is here now to map up the macros in 2025. Lata, take us through what the poll is telling us.
Well, the Indian rupee will slide to 86.25 by March 2025 and to 87 by the year end. That's according to a poll of economists and bank treasury heads done by CNBC-TV18. Treasury heads, of course, varied in their levels. The range for March for the rupee was 85.40 to 86.5. But for the year, the economists' forecasts lie between 86.75 and 87.5. That's by December 31. An overwhelming majority expect a rate cut in February, taking the repo rate to 6.25 from 6.5 today. But that will move the 10-year bond yield only a bit to 6.7%, bankers told us. By the year end, however, the hope is equally divided between those who see one more rate cut and those who see two more rate cuts. So the repo rate could be at 6% or could be at 5.75, 50-50 vote on that. However, the 10-year bond yield is not seen going below the 6.5% mark in 2025. GDP growth is on an average seen at 6.4% for FY25, with the range of forecasts being 6.3 to 6.5, while the FY26 growth is seen at 6.6%. Again, the range here is 6.5 to 6.8%. Inflation in the current year, FY25, is seen averaging 4.8%, which is the Reserve Bank's forecast. For next year, that is FY26, the poll shows that CPI inflation may average between 4.4, around 4.4%. The range is 4.3 to 4.5%. Finally, the current account deficit is seen at 1.35% this year, FY25, and 1.2% next year, which is very much within the Reserve Bank's comfort zone. All told, prepare for at least a 2% depreciation of the rupee and a slightly downbeat growth. Of course, that will mellow inflation, and don't expect aggressive fall in bond yields.
All right, Lata, many thanks for joining us. That's the Indian macro outlook for 2025. Now, the rupee will slide to 86.25 by March 2025 and by 87 by the year end. That's according to a poll of our economists and treasury heads. As you just heard Lata take us through that. Now, let's talk about some of the other aspects that we are looking at as far as the outlook for 2025 is concerned. As far as the repo rates are concerned, and GDP growth on an average is being seen at 6.4%, with the range of forecasts being 6.3 to 6.5%, while the FY26 growth is being seen at 6.6%. Again, the range is 6.5 to 6.8. Inflation, the current year, is seen averaging 4.8%, which is the RBI's forecast for the next year. The poll shows CPI may average 4.4%. The range of expectations is 4.3 to 4.5%. Finally, the current account deficit is seen as 1.35% this year and 1.2% next year, which is very much within the RBI's comfort zone. All told, prepare for a 2% rupee depreciation and a slightly downbeat growth, mellowed inflation and no aggressive fall in bond yields. On to IPO corner. Ather Energies received the final nod from market regulator SEBI for its IPO. The public issue comprises a fresh issuance of shares worth up to 3,100 crore rupees. The issue also includes an offer for sale component of up to 2.2 crore shares by existing shareholders. With this IPO, the company will become the second EV maker in India to go public after Ola Electric. SEBI has also given the green flag to 5 more IPOs. These include Schloss Bangalore, which operates the well-known hospitality brand Leela Hotels. They're looking to raise around 5,000 crore rupees. Others on the list are 1,000 crore rupees worth Oswal Pumps IPO and Quality Power, which plans to raise around 300 crores. The regulator has also given the nod to engineering solution provider Fabtech Technologies and technology service provider iValue Info Solutions. So those are some of the IPOs to watch out for. Aerospace component manufacturer Unimech Aerospace made a strong debut on the last day of the calendar year. The stock listed on the exchanges at a premium of 86% to its issue price of 785 rupees a share. The company's market value is close to 7,000 crore rupees. Its IPO received robust investor response, being oversubscribed 175 times when the bids closed on Thursday. Now, EaseMyTrip shares fell close to 10% in trade on the back of reports that co-promoter Nishant Pitti was planning to sell his remaining 14% stake via block deals. Remember, Nishant Pitti in September had divested nearly 14% of his stake for over 900 crore rupees. Hormuz is standing by now to take us through the curious case of what's going on at EaseMyTrip. Hormuz, Nishant Pitti looking to deboard EaseMyTrip. How is it likely to impact the company?
Now, there's always a way EasyTrip finds its way to be in the headlines. Now, be it the Maldives controversy or its foray into different businesses beyond its core business, there is a lot to talk about it. Now, let us take a look at the company and what is the latest that has brought it back into the spotlight. Now, news came in on Monday evening that co-founder Nishant Pitti, one of the promoters, plans to exit the company by selling his remaining 14% stake via block deals. However, today, only 1.2% of that stake has been sold. Now, based on the data last checked. Now, at the time of its IPO, the shareholding in EaseMyTrip was divided among Nishant, Prashant and Rikant Pitti. Now, Rishant and Nikant had majority of the shareholding, while Prashant had a negligible stake. Now, post its IPO in March 2021, Nishant and Rikant were down to 37% each, while Prashant's stake remained constant. Now, by June of 2022, both Nishant and Rikant gave 5% each of their stake to Prashant taking his stake to 10.5%. Now, as of December last year, more than 65% of Nishant Pitti's 28.7% holding was locked up. Now, come March this year, that was over, and then came the selling. Now, in September, Nishant Pitti sold 14% stake in a block deal in what was an earlier plan to sell only 8%. Now, that fetched him a cool 920 crore rupees. Now, Pitti may have halved his stake, but who bought it? Did institutions buy it? Not really, because institutional shareholding in EaseTrip is nearly down to zero. Now, what started off at almost quarter to 7% at the time of its IPO 3 years ago, domestic mutual funds now have only 0.2% stake in the company. So who's got the stock? No prizes for guessing here. Retail. Now take a look at this. Now, similar to domestic funds, retail too started off at around 6% during its listing in March of 2021, and come December this year, that stake has gone up to 34%. So retail investors technically own 1/3 of the company. Now, in absolute terms, there were almost 50,000 retail investors in EaseMyTrip during its IPO, and that number has gone up to almost 10 lakh by the end of December this year. Now, in January, EaseTrip had suspended bookings to Maldives following a diplomatic row, and a move that was later reversed in October. Now, however, during this period, the number of retail shareholders in the stock has doubled. Now, EaseMyTrip has on numerous occasions dangled this bonus issue carrot to keep the retail flock interested. It announced a bonus issue in February of 22, another one in November, during which it also announced a stock split, and another bonus issue came in as early as October and November of this year. But have financials matched up to that? Not quite, because the profit at the end of FY22 stood at 24 crore. That number is still at 26 crore after making a peak of close to 50 crore. Now, EaseMyTrip has also been in the news for its interests other than its core business, because earlier this year, Nishant Pitti, along with SpiceJet chairman Ajay Singh, submitted a 1600 crore bid for the now defunct Go First. Pitti withdrew from this bid in his personal capacity in May, saying that he wanted to focus on the long-term vision of the company. Now, the company also announced plans in September to foray into manufacturing electric vehicles. A travel company making EVs would leave many question marks, but the kind of market that we were in back then, the stock went up 11% post the announcement, only to fall 6% the next day. So what next for EaseMyTrip? Now, to be fair, there are multiple questions that need to be asked. Will Nishant Pitti be able to sell his remaining stake? 2, if he does manage to do that, will other promoters also follow suit? Will retail continue to pile into the stock on this lure of bonus issues and stock splits and so on and so forth? And lastly, all eyes will be on the December shareholding pattern that could be up anytime next month. Now, it's been 4 years since EaseTrip went public. It has had its moments, both good and bad, but the trip ahead is anything but easy.
Well, those are the big questions. Many thanks, Hormuz, for joining us. We will head to a break, but up next, Donald Trump supports H-1B visas, backing Elon Musk's stance, even as Republicans remain deeply divided. Musk also adds the visa program is broken and needs reforms after saying he will go to war over the issue. Parikshit will join us to discuss the H-1B visa row on the other side with former Ambassador Meera Shankar and Shivendra Singh of NASCOM.
Welcome back. You're watching Business 360. We're seeing a major political row in the United States over H-1B visas. This has sharply divided the Trump camp, and staunch Republicans are hitting out at Tesla CEO Elon Musk and billionaire Vivek Ramaswamy for supporting the H-1B visa program, which is used by skilled professionals to work in the United States. While Musk and Ramaswamy have backed H-1B visa program, saying it helps America hire the best of American talent, many Trump and Republican supporters believe it undermines America first and American workers. In fact, the appointment of Sriram Krishnan as the White House policy advisor on AI has also not gone down well with the Make America Great Again camp, with many calling him an India first supporter. For now, Donald Trump, the president-elect, has backed Musk and said that he likes H-1B. So what could possibly happen in Trump's second term, considering denials of H-1B petitions went up from 13% in 2015 to 24% in 2018. They fell to 4% by the end of the first year of the Biden administration. Joining us right now are Shivendra Singh, Vice President, Global Trade Development Department at NASCOM, Meera Shankar, former Indian ambassador to the US. Thank you very much for joining us, ladies and gentlemen. Ambassador Shankar, let me begin by asking you, we had seen a sharp increase in denials of H-1B petitions during the 4 years of the Trump regime, Trump 1 regime. How do you think things are placed right now, considering the strong divisions in the Trump camp and strong rhetoric on immigration? Do you expect the Trump camp and the Trump administration to go down harder in curbing the H-1B program or making it more expensive to get foreign workers?
Because you've seen Musk's subsequent statements also. After he backed the H-1B visa program, he now says the program is broken and needs major reform. And amongst the major reforms he has suggested is increasing the wages which have to be paid to H-1B workers, so having a ceiling, a higher wage ceiling, imposing a yearly fee for issue of H-1B visas, in all making it more expensive for the US to hire foreign experts under the H-1B visa program. So we have to see where the final consensus emerges. Clearly, my sense is that the H-1B visa program will not be done away with because it is economically crucial to many US companies, and a large number of the H-1B professionals who go from India are taken up by US multinationals like Elon Musk's Tesla or SpaceX or Microsoft or Google or IBM. So it is not Indian companies. Indian companies do have recourse to the H-1B visa program, but amongst the largest users of the H-1B visa program are American companies. And most of them would be rooting for continuation of the program. So if push comes to shove, and you have, a political base which is riled up about immigration, and on the other hand, you have economic necessity because there's a shortage of talent in the US, particularly in engineering and the sciences, then I think President Trump has made it clear right now that he will plump for economic pragmatism. But continuation of the program does not mean that new conditionalities may not be attached to the program. And these may have the effect of making it more difficult for our companies to hire people on H-1B visas. See, US companies have deep pockets. They can pay higher wages. As it is, most Indian nationals who are there on H-1B visa programs have already a fairly high wage level as compared to the average US worker. So I think we have to wait and see where the consensus on this arises. But I think we should also be active in getting across that this program actually helps the competitiveness of American companies and therefore would be crucial to make America great again.
That's a very important point. And Shivendra, if we can come across to you, we saw how the NASSCOM president recently said that any curbs on the H-1B program may actually lead to a lesser flow of talent from India to the United States. But at a larger level, what has been your dialogue with the Indian government and also to the US government on the matter?
Well, thank you. And I absolutely echo what Ambassador said on this one. It is beneficial to the US economy, and the H-1B workers play a very critical role in making US the #1 economy. Now, let us look at a bit of the rationale behind H-1B, while there is a lot of discussions and perspectives around it floating right now. I think the rationale is that it fulfills a very critical, bridges a very critical skills gap that exists in the US ecosystem. And with AI and new emerging technologies, this is going to increase. And around the world, we are faced with this challenge, including the US. And there are a lot of misperceptions, as we know, and I just wanted to clarify on a few of them. First of all, we hear that it displaces American workers, it leads to unemployment, the wages that are being paid are lower, and it suppresses US worker wages. Now, all of these are absolutely untrue. when we look at displacing American workers, it's a minuscule. In fact, 85,000 can be, put into one stadium for a workforce. So it does not really have an impact on that in terms of total numbers. Secondly, if you look at numbers of unemployment right now in computer occupation, it's just about 2.5%, which is close to zero unemployment in this area. And even USCIS numbers on wages, when you look at it, the median wage is about 122K, and the average wage is about 132K US dollars, which is more than what is expected to be in terms of the prevailing wage or comparable US workers in that area. So that is also not true. And when you look at suppression of US workers' wages, there are various pieces of research which are done which point to a figure of more than US workers with computer occupation having earned more than 10 to 40% compared to other non-STEM workers. Now, if that is the case, how is it suppressing that? So I think the value is.
I'd like to take some final questions. Could you also tell me, how do Indian IT companies stand to lose, or how do they get impacted if there are curbs on the H-1B program? If getting an H-1B gets more expensive, there is a higher fee, there is a maintenance fee as Elon Musk is asking for. How will this directly impact some of the big IT companies in India like Infosys?
So look at the current numbers. Even today, when you're looking at numbers, a company has to pay nearly $39,000 to $50,000 extra in the whole process. And I don't know how many of you are aware that there is a $600 asylum fee linked to the H-1B visas, which is absolutely unrelated. There is no relation to an asylum fee to an H-1B visa. So in any case, there is a pretty high barrier in terms of raising the fees to get H-1Bs. For us as NASSCOM and the discussions that we've had with our government as well as with the US side, we consider this to be a trade issue and not an immigration issue. And that is where we have to very clearly define it, because at the end of the day, it's a market access issue where you have problems in fulfilling your business requirements, because it does not affect your net migration numbers to the US. And we are absolutely clear, for immigration, the government has an absolute right in doing whatever it wants to do. But as far as this is concerned, H-1B is a non-immigrant visa, which is bridging a critical skills gap. And our companies, as an industry, we've spent more than $1.1 billion in local upskilling in the US, working with more than 2.9 million students to develop skills locally. Now, till that time, the gap is there. H-1B will continue. We are all for local hiring, but the bridging of the gap.
Shivendra, we've completely run out of time. We'd like to thank you and Ambassador Meera Shankar for joining us on this important topic. Clearly, as Ambassador Shankar said, we need to be had in close dialogue with the US government on this issue. With that, it's a wrap of this edition of Business 360. More news and updates right here on CNBC TV.